Good morning, everyone. We're just a couple of minutes away from starting our webinar. We will get started right at 11 o'clock. Thank you so much for joining. All right, it is 11 o'clock, so good morning to you all. Thank you for joining us today. You have joined the Colorado Paid Family and Medical Leave January webinar. And my name is Tracy Marshall. I have the honor of serving as the Division Director for Colorado's FAMLI program. Joining me today as a speaker will be David Gallivan, who helps with all things legal from FAMLI's perspective and our policy team. And then we also have AJ with us, who will be doing some demonstrations for you today. Just of note, we will not be using the chat function today. If you do have questions, however, please use the Q&A function, and we do have a team of additional staff members from FAMLI that are going to try and get to as many of those questions as efficiently as possible. So a quick look at our agenda for our time here this morning. We're going to take a look at the scores on the doors and the numbers for our first year of FAMLI. We'll talk a little bit about federal tax withholding options and where to find your 1099. We'll also talk about new rules for self-employed workers, and we'll be doing that demo, as I mentioned, about how you can elect family coverage, plus some other great topics. We'll leave room at the end for your questions and answers. So diving into the metrics and the numbers that we've seen over the past 12 months, 1 year of FAMLI has certainly been an exciting time, and we're very, very proud of the work that we've been able to do for the people of Colorado. Almost everyone who filed a FAMLI claim completed the entire process online without needing to reach out to us through our contact centers for help. The most common reason people have taken leave is to take care of their own serious medical condition. We've had more than 78,000 claims for that reason alone. The second most common reason is to spend time to bond with a child that has recently joined their family. We saw about 57,000 claims for bonding last year. And what we do know so far is that at least 114,000 workers were able to successfully complete their leave and return to the workplace. You'll see that we're seeing an average leave duration coming in at just under 8 weeks. And you're welcome to look at these numbers anytime on our FAMLI webpage, and we call that FAMLI by the numbers. So, the IRS just put out new guidance for taxation on paid family and medical leave this morning. We'll drop a link in the chat regarding this new information, and we are going to be reading it in a more in depth manner. But in the meantime, while we're still working through those documents that are hot from the press, I did want to share with you that now claimants will be able to choose if they wish to have federal taxes withheld from their family benefits. It's now built into the application process, and it is a simple opt in or opt out option, with the rate being set at a flat 10%. If somebody already has an active claim with us, this won't automatically change. Active claimants have the option to change their tax preferences in their payments dashboard, and that can be found in the My Family Plus portal. If you select to have federal taxes withheld, the funds will be automatically withheld from all future payments, and family will then send the withheld amount on your behalf to the IRS. You can change your decision at any point for future payments, but we will not be able to retroactively collect funds that previously were not withheld. All eligible claimants who received family benefits in 2024 have been notified that their 1099-G forms will be available shortly. Hopefully, you have already received that notification. We are doing a somewhat slow rollout, and some of those 1099-Gs will be getting mailed out in the next few days. We do know that they will all be available by the end of January, and we are getting help from USPS in sending those out. So please do allow for any postal delays that may impact your home area. You will always be able to find your 1099-G online, as is shown here, and that's including for those folks that chose to have it mailed to them also. The Family Division will issue that 1099-G to all claimants who receive family benefits totaling $10 or more. And family benefits will be reported in box 1 of the 1099-G, which has the same label for unemployment compensation. So we'll be using that same box that UI utilizes. I'm going to hand you now over to David Gallivan.
Right. Thank you. So new year, new rules. We had a bunch of administrative rules go into effect on January 1st, reflecting changes to the program based on our first year of operation. The one I really want to call everyone's attention to is for employees of opted out local governments and self-employed individuals. So those are both groups that have the ability to opt in to participate in FAMLI. What we've changed is that now has to happen before you have a claim. Last year, because we were a new program, we were permitting retroactive enrollments. That is no longer the case. We're now operating as you would expect an insurance company to operate, by requiring somebody to have coverage before they file a claim, before they suffer the loss. What that means for us is that you can come in and you can elect coverage on any date. You can say, I want to be covered under FAMLI as of today, and we will bring you into the program. But until we have wages in our system that you have paid premiums on, we can't calculate any benefits for you. So your benefits will not be available until after you've reported and paid premiums for at least 1 quarter. So that means if you were to opt in now, early on in Q1 of 2025, we wouldn't be able to calculate benefits based on wages until you had reported those earnings to us at the end of the quarter. So that would be at sometime after March 31st, and then paid those premiums. Your first premium payment is actually going to be due at the end of the month following the end of a quarter. So that's this year, April 30th, July 31st, October 31st, January 31st. I don't know why I said this year. Those dates don't change. Those are always the end of the month after the end of a quarter. So those are always going to be your reporting deadlines to come in and pay those premiums. Quick reminder, self-employed individuals can get family coverage if they voluntarily elect to pay premiums. Premiums are equal to 0.45% of their earnings, and they have to commit to participate in the program for at least 3 years. And again, you got to opt in and make that commitment before you file a claim. Self-employed workers need to do two things when they opt in. They've got to help us verify their identity, and they have to get us a tax transcript so we can make sure that we have the correct income when they file a claim. We are working on some other ways to verify income and check out your earnings, but we want to make sure that you are paying the right amount of premiums. More importantly for you, perhaps, make sure that we are paying you the right amount of benefits. If you underreport income, that's what feeds into our benefit calculation, and it would result in you receiving lower benefits. So we want to get an accurate picture there so we can get everything right. We do have resources on the FAMLI website if you want to know how to verify your identity, and some guidance for how to deal with the IRS for how to get a tax transcript. I had to do that about 20 years ago, and it wasn't that bad then. Now they have some better online options. It should be a little bit easier for everybody to come in and verify their income. Until the end of last year, so up until December 31st, self-employed workers who elected coverage but hadn't completed either of those tasks were blocked from reporting quarterly wages. Now, in 2025, we will let people report their wages and pay premiums. However, we're not going to be able to use those self-reported earnings as a basis to calculate benefits. We got to see that tax transcript, and that will allow us to calculate those benefits for you. A couple other highlights, things that are new for 2025. Income from self-employment should include W-2 earnings if applicable. So if you are receiving from a trade or business any income, anything that's reportable on Schedule E, Part 2, Section 28, this includes S-Corp earnings. So all of that's part of your income. Elective coverage, again, just like I said, begins when your notice of election's filed, but we can't calculate your benefits till we get that tax transcript and we have proof of your earnings. This is also limited now to individuals who are Colorado residents. We got to make sure that you are living and working in Colorado to be covered underneath this Colorado program. With that, I am going to step back for a moment and hand it over to my colleague AJ, who's going to give you a really cool demonstration of our system.
Thank you, David. Give me one sec to get my screen up and running here. All right, hopefully everyone can see my screen all right here. First thing I want to show everyone is the MyFamily Plus employer portal. Whether you're a self-employed individual or an employee of an opted out local government, this is where you'll begin your process for registering for family and opting into coverage. Before accessing the MyFamily Plus employer portal, you will need to create an account with login.gov. I'm going to skip demoing that specific process here just in the interest of time, and we'll go straight to the MyFamily Plus employer portal. So once you've created your login.gov, you will land on the premiums dashboard.
Jade, I can't see the screen.
Huh. It looks like I'm sharing my screen.
Yeah, you are. I can see.
AJ, we can see your screen just fine.
Okay, cool. And then I will continue here. Once you have created your login.gov account, you will land on the MyFamily Plus employer dashboard, the premiums dashboard. And this is where you will begin your process of registering your self-employed account or your employee of an opted out local government account. We are going to start with an employee of an opted out local government by clicking the add organization. And once you get to step 1, you will select employee of an opted out local government. Once you click continue, you will see a little pop-up asking you to confirm that you are committing for 3 years. And as David said earlier, your first premium payment is not due until after the end of the current calendar quarter. Click yes, continue. And here you will have the opportunity to add your local government employer here. It does say that you can search for the local government name. That is not actually correct. You will need your local government's FEIN for this. So you will need to reach out to them and find that out. I have a test one here that I'm just going to plug in and click search. Once your local government shows up there, you can click continue. And it will take you to step 3, where you will enter your personal information. Let's just make something up here. For an employee of an opted out local government, your HR benefits point of contact should be someone at your local government who handles overall benefits. So this is where notifications about claims will be sent, and the person who will have access to the claims dashboard on My Family Plus employer. So let's just add Java here as my HR manager. It sounds like a nightmare HR manager, but what can you do about it? Again, this dropdown, it will probably be a benefits contact at your employer if you are an employee of an opted out local government. This HR benefits mailing address is where paper notifications will be sent regarding claims. So again, this should be someone at your local government. And one thing I want to point out here is just what David was talking about earlier. Your elected coverage start date will always be the date of registration. You cannot change that. It will automatically be populated. And then the next thing that will show up here is whether you want your local government employer to help manage your account and remit wages on your behalf. This is something you'll need to talk to your employer about to see if it's something that they offer. For our purposes, I'm just going to say no and continue on, which means that I have the responsibility myself to report wages and make premium payments. Let's go ahead and enter a personal address here. This will be your own address. You have an opportunity to add a different mailing address if you have a couple different ones. And then there's some optional demographics that I'm going to skip over for now. Click continue. You have the opportunity to add additional users to your account. I will also skip over that. And that brings us to step 5, where you can confirm all of the information that you just entered. So if we scroll down, everything looks correct. I've got 2 attestations here that I'll need to click. One is that I'm participating for 3 years, and the other is that I'm providing accurate information. Once I attest to both of those, I can click submit. Once this processes, I will be taken to a confirmation page. Once I click view dashboard, I will be back at the premiums dashboard. And from here, I can report wages and make premiums payments. So that is the process for an employee of an opted out local government. I am going to pause for just a second and bring up a new account so that I can show you the process for a self-employed individual. All right, great. Let's pretend I went through everything with login.gov again, and I have now landed on the premiums dashboard of My Family Plus employer. Once again, I will click add or link an organization. Once I get to step 1 of the registration process, this time I'm selecting sole proprietor / self-employed individual. The first thing you'll notice here is something that David talked about earlier. You will be asked to provide your tax transcript, your W-2 if you have any W-2 wages, and a document to verify your identity. As David said, there's more information here about how you can request your tax transcript from the IRS. So I won't get into that at the moment. You will need to enter the year of that tax transcript. Since we're early 2025, 2023 is probably your most recent tax transcript. And I will go ahead and just upload a test PDF here. If your employment does include W-2 wages, you will click yes and upload documentation of your W-2 there. I'm just going to say no for now. And then the next thing you'll need to upload is a photo ID that is not expired. You can see the list here of the different options that we accept. I will go ahead and again upload a test PDF. Once those are all uploaded, scroll back down and click continue. At this point, you will be asked to enter information about your self-employed business. So I will go through here, enter some information, enter my home address. And you have the opportunity to choose a different mailing address. I'm just going to leave them the same. Click continue. We'll collect a little bit more information here about your industry. I don't know, maybe Han Solo is taking the Millennium Falcon, people on the Millennium Falcon for tourist purposes. As a self-employed individual, your HR benefits point of contact will likely be yourself. It could also be someone you have granted the ability to manage benefits on your behalf. I'm just going to say it's myself. So all notifications of claims will come to me. Once again, same mailing address that I put earlier because I'm my own HR benefits point of contact as a self-employed individual. And much like we saw with the employee of an opted out local government, your elected coverage start date will automatically be today, the date of your registration, and that is not editable. Once again, also there's some optional demographics I'll skip over. We have the opportunity to add additional users. I'll skip over that as well. And now we get to the review information screen. You can just check that everything you've entered is correct. Attest that you are participating for 3 years and that you are providing accurate information. Click submit. And I'm getting a critical error. That is interesting. In any case, you will land on the same confirmation page that you did as an employee of an opted out local government and be able to report wages and pay premiums from there. And I won't take up time trying to figure it out.
The email address you put there is not ending with .com.
Oh,
Okay,
that's
okay.
why. Okay. That is what is causing our problem. I did not enter a valid email address. Needs a .com there. And now we should be able to submit. Have to reattest to those. All right, perfect. Thank you, John. Yeah, so once you click view dashboard, you'll be taken back to the premiums dashboard where you can submit wages and pay premiums. And that is the end of my demo. Feel free to throw your questions in the Q&A and me and my team will do our best to answer them.
All right, thank you for that. I'm going to move on then and talk about another part of our system, something we're very excited about that just rolled out at the beginning of December. We've upgraded our entire appeals process. So this streamlines everything. If you are appealing a decision of the family division, it gives you a one-stop portal to get all of that information to handle scheduling submission of documents for claimants, employers, for attorneys or representatives. Other interested parties can all access this new platform. For claimants, the first step if you're challenging a family decision is to request a reconsideration. You do have to request that reconsideration before you can move on to the appeal. You do that by following the prompts in the My Family Plus portal for your claim. And you can go through the reconsideration process. We do that to review to see if there are any non-legal issues with the claim that we can resolve before you have to go through the rigmarole of scheduling a hearing and being in front of one of our hearing officers. So a lot of times we can resolve issues and claims at that reconsideration process and save everybody a little bit of time and hassle. We do have step-by-step instructions on how to file an appeal in the My Family Plus user guide for claimants. One of the interesting things about this is that it is a separate system, at least from the My Family Plus employer portal. And so everybody needs to have a login to the My Family Plus, even employers who otherwise aren't required to have a login to that portal. If they want to file an appeal or participate in an appeal, they need to set up a login. in that portal. So when you do log in, you can navigate to the dashboard and select the Claims tab. From there, you'll want to follow the instructions to file your reconsideration. Again, step-by-step instructions. After that reconsideration, if a claimant still disagrees with the division's decision, then they can file a formal appeal, and that brings it in front of our hearing officers. To do that, you would select the appeal button. You'll see when you log into the My Family Plus in the appeals section. And that's going to be on the claims detail page of the claims tab. The button that you clicked before to request a reconsideration will magically transform. It will now say appeal, and you will click that to start the appeal process and be guided into that portal. The system will take you to the appeals account for your next steps. You can track your appeals by selecting the appeal account type when you log into My Family Plus. And for pretty much everything involving our system, but this in particular right now, there are step-by-step instructions in the My Family Plus user guide for appeals. You can also always contact our customer service unit. Now, they can't give you legal advice, but they can help you navigate our system and figure out which buttons you need to press in order to get to where you need to be. And with that, I will hand it back over to Tracy Marshall.
Thank you so much, David and AJ. So just as a reminder, we always have additional resources available for you in our FAMLI toolkit. They are available for your download on our website. Feel free to utilize them in whatever way is best for you and your employees. The Employee Handbook to FAMLI is a great resource to help you understand your rights, protections, and future access to wage replacement benefits. We do also have fact sheets in English and Spanish, along with many, many other resources. As always, we do want to hear from you. You can engage with us in a variety of ways. We're on an assorted number of social medias, and we always encourage you to subscribe to our FAMLI newsletters to make sure you're receiving the most up-to-date information. With that, I will hand you over to our communications team, who will be facilitating today's Q&A.
Thank you, Tracy. I do just want to mention that our team of awesome subject matter experts has already answered 37 questions in the Q&A function. So good job, everyone. Keep typing your questions in, and we'll either answer them live or type out those answers. I'm going to start with a question here from Lana, who works for an opted-out employer. The question is, she works for an opted-out local employer, took the 12-week maternity leave to the birth of a child through FAMLI, FAMLI. Is my employer allowed to use my time bank, sick, vacation, personal, and comp time, even though I have left work for unpaid leave? David, do you want to answer this one?
Yes. So this is something that has always been the case, but we did adopt some clarifications in the rules that took effect on January 1st, just to make it more clear. We don't have any authority to regulate the actions of those local governments that have opted out. So everything in that relationship between the employee and that local government, it's subject to all the other employment laws, but our family regulations don't apply. So we can't come in and tell that employer, you can't require them to use PTO or you can't use that leave bank. Now, for private employers, that's not the case, and there's an absolute prohibition on that. But for opted out local governments, at least as far as FAMLI is concerned, they are permitted to require the use of that type of accrued leave.
Thanks, David. And we have another follow-up from Lana here. Her question is, she's opted into the 3-year contract with that local government, but what happens if she decides to take a job in the future that is not located in Colorado? Can we transition out of that 3-year payment contract if they move to another state, or can we stop paying the 3-year agreement if we do not live in Colorado?
That's a great question. So officially, what happens when you opt in is for 3 years, you are required to pay premiums on your earnings that would be subject to family premiums. And you're also then eligible for benefits for that time. If you leave the state of Colorado, so you leave that job, you leave Colorado, that requirement's still there, but you don't have any earnings that are subject to premiums. So your premium is effectively zero. And you can report to us that your earnings are zero, and that will take care of that obligation. So you're not obligated to pay premiums. You really can't pay premiums because there's nothing for you to pay premiums on because you're not earning anything in Colorado. You're also not eligible for benefits, but that 3-year clock is still running. So if you do come back to Colorado in 5 years, you will have already fulfilled the requirement. You don't have anything to worry about. That's a very long way of saying, yeah, if you move out of Colorado and you stop working for that employer, you don't have to pay us premiums.
Thanks, David. Another question from an opted out employer. Can an employee submit a claim for family leave and use it intermittently if they are still submitting personal leave bank and no loss of income has occurred?
Yeah, so we don't, when we're calculating the benefits, we don't look at the at anything else that you're being paid. So we would look at if you're on leave, you're entitled to it. You are actually, in a financial accounting sense, suffering a detriment because you have this accrued leave that is being used. So you have this leave bank out there that is under Colorado law, money that you're entitled to, and you're using that. So we would look at that and still say you were eligible for benefits. I don't think we've examined this particular situation for formal guidance. It's something that we may need to take a look at. But yeah, ultimately, that would not prevent you from receiving your family benefits. What
Thanks,
should
Steve.
happen in that case, sorry, is that you should be using your leave or your accrued leave as a top off to take you up to 100% of your income. So you should only be getting the accrued leave as a makeup over your family benefit. But for opted out local governments, again, we can't regulate what they're doing. So it could result in some higher benefits there.
Thanks, David. We have a question here about workers' comp coordination. Can workers' comp claimants denied in 2024 before Section 4C was added, accepting notice of contest, now reapply?
You can. I can't make any guarantees that the outcome would be different. So the big issue here is that we want to make sure that if you're hurt on the job and you're entitled to workers' comp benefits, that you are getting those benefits paid by the workers' comp insurer, because you should be getting the right amount of benefits and the right person should be paying, and that's the insurer for your employer. So if you should be receiving workers' comp benefits because you were hurt on the job, we want to make sure that that's what you're receiving. And that you're not receiving family benefits, which might, over the course of your work comp claim, actually be quite a bit lower. So we want to make sure that the right entity is paying. If you're hurt at work, it's workers' comp. If you're not hurt at work, it's us here at FAMLI. So we were having some technical issues in terms of how do we verify things, which is why last year we weren't accepting those notices of contest from workers' comp as evidence that the claim wasn't being paid. I did workers' comp for 12 years. I am one of the world's biggest workers' comp nerds. So I'm trying to regulate myself here to not tell you all any more than anybody ever needs to know about how the workers' comp system works. But the big question for us is we want to go in and see and make sure that you are not receiving workers' comp benefits. So we want to make sure the right entity is paying. We want to make sure that we're not double paying. And we're working on ways to do that and confirming with workers' comp. So you can definitely reapply. We would definitely look at that case. And we want to get down to that actual question. Also, if your claim is denied, you can definitely follow that process for an appeal and have a hearing officer look at it. Because again, the key issue isn't whether or not you have a notice of contest from workers' comp. It's whether or not you're entitled to workers' comp benefits. And that can change after the notice of contest. So you can always bring that information in front of a hearing officer and ask them to look at the circumstances of your case.
Thanks, David. We have a question here about FMLA and family. We're lucky enough to have an FMLA expert on the call today, but I think this is more directed for the family folks. So I'm going to start with David, but Krista, feel free to jump in if you have anything else to add. The question is, if an employee is not eligible for FMLA and is eligible for FAMLI, what is the employer obligation regarding protecting an employee's job? For example, do we send an FMLA denial and wait to see if they're approved under FAMLI, or should we tell them the job is protected under FAMLI and for payment, they must follow the state's process?
So this is definitely a circumstance that can happen. We can have employees who are covered under both FAMLI and FMLA, under the state and the federal program. But there could be a circumstance where FAMLI is a little bit broader, right? We cover different relationships, we cover different circumstances. So they could be going through a life event that would qualify them to access FAMLI benefits, but wouldn't qualify as FMLA. In that case, they would have job protection, assuming that they work for that employer for at least 180 days under FAMLI. They may not have it under FMLA. As an employer, you need to make sure that you're complying with both laws. And so from the FAMLI perspective, yes, you'd want to give them that notice. That job would be protected. They would have to be returned to their position at the conclusion of the leave. I try not to say what you should do under federal law, but in general, you should comply with federal law. And I would invite my colleague from the USDOL to jump in if there's anything that you'd like to add.
Yeah, thanks, David. I think you covered that really well. I would say that the only thing I would add is that as the employer, you would still be required to provide that designation notice to your employee who has requested FMLA leave if they are denied. So you want to follow all the same designation employee notifications from the FMLA side of things as well.
Thank you, Chris. We have a question here that I'm going to hand off to either AJ or Lindsay. This is about the My Family Plus employer system. The question is, if we need to submit quarter statements from Q3 in the wage reporting sections since January 31st payment isn't past due yet, how do we do so? The only option in the drop-down box in the reporting wage section, quarterly statements, is for the current quarter as of right now. I will say that Q3 2024 was due October 31st, 2024, but AJ, Lindsay, feel free to jump in.
AJ, I think I'll hand that one to you as it talks about the system and drop-down menus.
Yeah, I'm trying to read through it here. Yeah, I would think, and a teammate is confirming this for me, that your plan start date does not include Q3 2024. So you might have registered after that point. In this instance, you will likely have to call into the call center and get that sorted out. You can't, essentially the system doesn't let you report wages for a quarter that's not that it doesn't think that you owe wages for, if that makes sense.
Lana, feel free to jump in if you have more context to add, but if you are trying to report for a self-employed individual or an opted out local government employee, I think your situation might be a little bit different. And this goes back to our new rules where you can't retroactively elect coverage. Your coverage start date is the date that you register, and you will report wages for that quarter. David, did I capture that accurately?
Yes.
Yeah, that was a good clarification. Thanks, Jessica.
I'm going to take a question here from Veronica. What happens to the premiums paid by our part-time employees who do not work enough to make a claim for FAMLI? David, can you clarify that for us?
Absolutely. So in order to be eligible for FAMLI, you have to make at least $2,500 in a previously closed quarter. Once you do that, you're eligible for FAMLI. So there can be workers out there who are working very light schedules at lower pay who don't reach that. Their wages are still subject to premiums. And one of the things that I would remind people is that They may not be reaching that threshold based on what you're paying them, but we look at all earnings, and it's very possible that that person might have another job that would bring them across that threshold point. So yes, they do pay premiums, and once they cross that threshold, then they will be eligible for those benefits. But otherwise, their premiums are just paid into the program.
Thanks, David. I'm going to jump down to a question from Anne. Her question is, can an employee have more than 12 weeks of leave in a year if they have two different situations? For example, the birth of a child and a sickness. David, can you take that?
Yeah, there is one circumstance and one circumstance alone in which somebody can take more than 12 weeks of family in a given benefit year. And that is a situation where somebody suffers complications either with pregnancy or childbirth, in which case they could be eligible for an additional 4 weeks. So the maximum anybody could take here would be 16 weeks. But that is the maximum bucket of benefits that somebody can draw from. So it's 12 weeks in general per year, not per instance or per qualifying event. So somebody could take multiple leaves for multiple reasons, but together they can't exceed that 12 weeks. The only way you can exceed that 12 weeks is if somebody has that complication from pregnancy or childbirth, and that does have to be the person who experienced the complication from the pregnancy or childbirth, who could receive up to 4 weeks. And the maximum anybody should be taking within any given year is 16 weeks.
Thank you, David. Another question here about job protection. If an employee has not worked for 180 days but is eligible for FAMLI, they can take leave but are not job protected. Does that mean we cannot terminate them but don't have to return them to their original job?
All right. So we're touching on a couple of different concepts here under the FAMLI Act. So bear with me on this. Job protection. So somebody who's worked for an employer for 180 days is entitled to job protection. And that means that they must be returned to their position upon the conclusion of their leave. So they go on leave. Once they're ready to come back, they go back to their same position, to the same job, same rate of pay, same everything else. There's another provision in our law that prevents retaliation. And this applies to everybody. So an employer cannot retaliate against an employee for taking family leave. And this is where things get a little wee bit fuzzy around this issue, because even somebody who hasn't paid for or who hasn't worked for an employer for 180 years, they're still allowed to take leave. They can apply for and take leave on their first day of employment. They'll still receive benefits from us. They're not entitled to job protection, but they can't be terminated solely for having taken family leave, because that would be retaliation. So the job protections are less for somebody who hasn't worked for 180 days. And if there are other issues in terms of that employment, and absences can be one of them, but you can't retaliate. So you can't take an action simply because they took family leave. So that's an area where you do want to be very careful. But at the end of their leave, if it's been less than 180 days, they don't have that automatic requirement to be returned to their position. But again, you also can't take away that position or return them to a lesser position simply because they took family leave. So if there's other stuff going on, that's always okay for an employer to take whatever action they need to deal with. But you do want to be careful that you're not retaliating against somebody for taking family leave.
Thanks, David. My computer is lagging, so I wasn't sure if I was off mute yet. Another question. Let's see here. What are the employer's obligation when an employee is on family leave and verbally informs the employer they won't be returning as an employee?
All right. So we have seen that happen. Somebody takes leave, and sometimes you get that verbal notification. Sometimes an employee just doesn't come back at the end of leave, or they have a condition that hasn't resolved and they're unable to come back. Once their leave is exhausted, the FAMLI Act really doesn't have a whole lot to say. we say they've got to be returned to their position, but that only applies if they come back, if they want it and they can. So in a case like this, where somebody says, yeah, I'm out on leave and I'm not coming back, as an employer, you can treat that like an employee just told you they're not coming back to their job. You can treat that as somebody resigning or quitting. That ends the employee relationship. They're still entitled, if they're on continuous leave, to receive benefits from us, and we'll continue to pay out for whatever was approved. But that is just the same as if any other employee told you that they weren't going to come back to work, and you can treat it exactly like that.
Hi, David. Jessica's having some computer problems, so I am going to step in and help out with the questions. Sorry, I just kind of got that notification, so let me find a question really quick, and we'll go from there. Okay. We talked about this. We have an honest attendee who's asking a question for self-employed workers. Is there a requirement to submit pay stubs? It is my understanding the self-employed worker submits the tax transcript and divides the annual income by 4 to come up with a quarterly wage report. Is that accurate?
So that's how we would initially receive your income verification when you first opt in. Moving forward, quarter by quarter, you do have the option to supply other information to verify your income. So you can then provide the pay stubs if you are receiving W-2 pay from, say, an S Corp. There are other ways for you to let us know how much you earn so that we can properly calculate your benefits. But that would be after we've initially received that tax transcript.
Great. Thank you so much for making that clarification. Let's see. Let me find another question. Let's see. Here we go. Another self-employed question. I have myself set up as a sole employee of my LLC. Should I be paying into FAMLI as the employer or the employee to utilize the benefits?
All right. So you're a single member LLC. You run the show. We treat you as a self-employed individual. If you choose to opt in to participate in FAMLI on your own behalf, what you would do is register as a self-employed individual and use the earnings from the LLC to support your claim and your request for benefits. So you would register then not as a employer, but as a self-employed individual, and you would know your business structure when you do that.
Great. Thank you so much for that clarification. Let's see. Here is a question actually that Chris, we thought you could handle for us. Do FAMLI and FMLA run concurrently?
They can. And I just saw a very similar question come in from some of our viewers on YouTube, asking if an employer can require an employee to use FMLA or FAMLI. So let's start with an employer cannot require an employee to use family leave. The employee can choose when they want to use FAMLI. FMLA, it either is or it isn't. And if somebody has a qualifying event for FMLA, it should be treated as such. So what you can end up with is a circumstance in which they experience a qualifying life event under both laws. You have to treat that as FMLA and process that, and they're going to take their FMLA leave, which is unpaid, and they elect to wait to file for FAMLI. In that case, FAMLI and FMLA will not run concurrently. They can access their family benefits after they conclude their FMLA benefits. Now, remember, FMLA runs, it is FMLA. If somebody has a qualifying life event, you should treat it as FMLA and do all of that, and the person's entitled to. Really, nobody gets a choice when it comes to FMLA. If it qualifies, it should be. So if somebody starts their family leave and it also qualifies as FMLA, in that case, the two types of leave will run concurrently. So what we say is there's one-way concurrency. FMLA is going to run with family. Family doesn't necessarily run with FMLA. So one thing I'd like to tell employers, if you're really worried about leave stacking and somebody taking FMLA and then going into family, remember as an employer, you're obliged to tell your employees about family, and you can remind them that Colorado has this program that will pay them money. We will give them money to access the family program. And that's a great incentive for employees who maybe aren't aware of what the program offers and aren't going to find out until after they start their FMLA leave. Let them know that we will pay them, we will give them money, and that will encourage them to come in and sign up and start their family leave at the same time with the FMLA.
Thank you so much, David. That was a great answer. Krista, is there anything that you wanted to add? I just wanted to give you the opportunity in case.
Yeah, no, I think David covered that great. I think the only thing that I would add is, it is the employer's responsibility in all circumstances for designating the FMLA leave. So as David said, no one really has a choice there. If the employer becomes aware of an employee's need for FMLA qualifying leave, it's the responsibility of that employer to designate that leave as FMLA leave and provide all of the designation notices to that employee, so that employee knows that they are that time is being counted against their FMLA leave time and how much time that they have left to use.
Great. Thank you so much, Chris. Let's see. We have an interesting question here. I don't know, David, this might be a little different, this is a little different, but anonymous attendee is wondering if employees are able to receive benefits while they're out on strike.
I'm just going to stand here and pretend my computer froze. Sorry.
Did I give you a really hard question? My apologies.
We don't have any specific guidance on that right now. In general, you take leave from employment, and so we've had some deep conversations about whether or not you consider to be employed, and I don't think that I have a clear answer for that, but we'll take a look at it and see if maybe that is something that ultimately we need to do some more formal guidance on our website on.
Yeah,
that's a great question.
That's a really, really interesting question. So thank you for, I guess it was something that the policy team will definitely be taking back. But let's move on to something that's more regarding going back to self-employed and a self-employed question. I'm self-employed and have a setup as the sole employer of my, I think we already did this one, sorry. I think I did not get rid of that one. Let me move to a different one. Let's see. Can any employee opt out of FAMLI? Tracy, do you want to take this one?
I would love to take this one. Repeat the question for me, Michelle.
Can any employee opt out of FAMLI?
No, individual employees cannot opt out of FAMLI. The only way that there's any kind of opt out is as a local government entity, and then individuals working for that local government entity would have the option to opt in, but there is not an individual workers opt out option.
Thank you, Tracy. Let's see, we're going to switch gears here a little bit, and we're going to talk about intermittent leave. We have a question about intermittent leave, and I know this is something internally we've been working a lot on. Do employees need to report the specific schedule they worked or didn't work to determine if they are off work for 8 consecutive hours, or do they just report how many hours they missed in total? Let's see, do we want AJ to see? AJ, I think maybe you can
this would actually be a Josh question. So Josh, you're on?
Okay.
Yeah, I'm on. Hopefully you guys can hear me all right. That's a good question. So the 8 hours is tricky. I don't know if you're referring to the 8-hour minimum to start paying the claim. That goes throughout the length of the claim. So say they missed 1 hour today, 3 hours the next day. Whenever they finally pass that 8-hour cusp, that's when FAMLI would start to pay out. But back to the work schedule, we have updated our system for those that have like varying work schedules and things like that. When the claimant comes in to report weekly time missed, they have the option to update their work schedule for that previous week. So say, this week they work 20 hours, next week they work 40. whatever they're reporting during that week, they're responsible to tell family what that work schedule was during that time, so that way they can report the necessary hours. So hopefully I've answered that for you.
You did great, Josh. Thank you so much for stepping in. Tracy, I have another one we can help out with. We have a employer, private employer, and they are asking, do we have to notify employees about if they can opt in or out of family leave condition contributions, and if so, by when?
Notifying employees if they can opt out of contributions for a private plan. I'm not sure I'm following that question.
Okay, let me try again. We have an employer, they're a private employer. So they're not an opted out local government or a local government participating. And so I think really what their question is, actually their employees cannot opt in or out. They need to participate. But if I think really what we maybe need to clarify here is if their employee has a instance where maybe they need family leave, what kind of, can you maybe expound upon and let us know what their obligations are to notify their employees about family?
Okay, thank you. So yes, as the employer, you do have a duty to advise your employees that they may be eligible to receive family benefits, but you certainly can't go as far as requiring them to file. But you are required to inform them that these benefits may be available for them.
Thank you. David, we have a question here. There's some localization involved in it. Is there, oh, sorry, it jumped around. I just lost it. Let's see. Oh, you know what? I think it was answered. Here we go. Let's do this 1099. For employees that took family leave in 2024, will they be receiving their 1099 via email, or is it only accessible online? Tracy or David, whoever would like to take that.
I think we're doing both this year. So you're going to receive in the online portal. And oh, wow, I just saw a hand go up really quickly from one of our tech experts. So Jeff, would you like to explain why I was about to say something wrong? You're still on mute, Jeff.
And I'm the tech guy. Yeah, what you were going to say, I'm sure wasn't going to be wrong, but just to be clear, everyone is getting their 1099 online in the portal. You can go through and see it anytime you want. 35,000 of them have been generated so far. The other 65,000 will be generated by Tuesday of next week. So you can just log in and see your 1099-G. Now, additionally, if you have not opted out of mailing, and it's an opt-out, not an opt-in. If you have not opted out of mailing, we will also be mailing your 1099-Gs, and we're in the process of doing that right now, and those should all hit the Postal Service by January the 23rd. Thank you.
Thanks so much, Jeff.
All right. So I wasn't going to be wrong, but I was going to be incomplete, and Jeff got us the complete answer there.
That's right, but we got the answer in the end. Let's see. Here we go. An opted out local government employee has a question. I report my own wages every quarter, and I have a question. I put the same amount in for gross wages and subject wages. I also put in 0 for withheld. Am I doing that correctly? AJ, can I ask you to answer that one?
Yeah, sure. I was just typing up the response to it. You should be fine. Technically for the withheld, it would be the 0.45% of your subject wages, but the system makes the calculation based on what you put in subject wages. So if you, as an employee of an opted out local government, put 0 in withheld amount, everything will still work correctly. So this person is fine.
Right. Thank you so much. I think really we're kind of running out of questions. We've answered, I know, 122 already. A lot of them have answers in the chat. So I think I'm going to turn it over to Tracy, and I think we'll end from there.
Thank you so much, Michelle, Jessica, David, AJ, Josh, everyone who's been busy answering questions today. I appreciate you all. As a reminder, our family contact center is open Monday to Friday from 7:30 in the morning till 4:30 in the afternoon. We are closed on any state holidays, so that will include MLK Day coming up on Monday. We have seen a higher volume of calls recently, so you may not be receiving a pickup on your call quite as quickly as you've been used to in the past, but we ask for your patience and we appreciate your patience, and we will be getting to all of your calls as quickly as we're able to. Again, thank you for your time today. Don't hesitate to reach out if you have any additional needs, and we'll see you next time for the next webinar. Thank you so much. Bye-bye.